In today's video, I'm going to be sharing with you a simple beginner-friendly strategy for trading gold. And this strategy has an average potential of giving you about 50 to 200 pips per trade. But before we proceed, kindly hit the subscribe button below and turn on post notification to get notified whenever we release a new video. So having done that, I also want to tell you that statistics has proven over time that the simpler the strategy, the better it is for you as a trader. So kindly keep in mind that you don't need an overcomplicated strategy to make money in the financial market. But also kindly remember once again that please kindly subscribe to this channel because your subscription means a lot. Thanks in advance. Let's get started. So I want you to keep at the back of your mind whenever you are trading gold that gold moves from zones to zone. If you keep this at the back of your mind, you're gonna be profitable trading gold. We also call it FNR zones, and just by this strategy is just by marking out the recent highs and the recent lows, right? So this right here was the recent high we marked earlier, and then before price broke it, right? Before price broke it yesterday, before price broke here, right? So now we went all the way to the 1 hour to look at the next zone, right? And we're going to be putting our zone at the body of the candle. As you can see, this was the highest place, and then we put it at the body of the candle, right? So we went all the way to the 1 hour time frame to look for the next zone we're going to be seeing, right? And I went all the way back to my left hand side because that's the highest place price has gotten to. This was it right here, guys. As you can see, it was the zone was at the body of the candle, right? We're going to be marking the body of the candle. This is right here, so we'll put that body of the candle right there. So these are recent high now, right? So and then as price got to the zone, a consolidation happened, right? A consolidation happened right here. Let me zoom into the 30 minutes. As you can see, guys, a consolidation happened right here, and then as the consolidation happened, we're going to be waiting for a break of the neckline, right? So guys, so this was the first one we marked right here. We mark the high and we mark the lowest point, right? So how I trade is, if price breaks up, I'm going to be buying, and if price breaks down, I'm going to be selling, right? Because we're now at the zone, right? We're waiting for something to happen, either price to break out or price to break down. So if price break down, it's going to be going down back to the recent low we marked, right? So if price breaks up, it's going to be going to another zone, right? So and then we went all the way into the 15-minute time frame when price broke. I'm going to the 5 minutes right here. So this was where price broke right here. So this was where price broke, guys, right here. And then we're targeting about 103, not to be too greedy, and our stop loss was below the candle that broke it, a little bit below the candle that broke it. So that was about, we're risking about 15 pips right there. So this was a 1 trade, right? So that was about 50 pips back right there. So guys, and so I don't like, letting my stop loss be too tight, so that's why I put it to 15 pips. My stop loss was about 15 pips right there, or 15 pips, yeah. So and then it was a 1 trade, and along the line when price got here, we took partial profits, and we took another partial profit before letting the trade come back to this high right here, and then we got out, right? So we don't also want to be too greedy. You don't also want to be too greedy, even though it's gonna still go a long way. You also don't want to be too greedy because the markets can reverse at any time. But the thing is, you should not also be too too impatient to take your profits maybe at 1:1 or something like that. You should at least 1:2, 1:3. All right, so that's the strategy. Just know that gold moves from zones to zones. It moves from zones to zones, and when you get to that zone, the 1 hour zone, the 4 hour zone, you have the daily zones. Just mark out the recent high and the recent lows. So that's it, guys. So guys, I just want to give you guys another example of the strategy I'm trying to explain to you. I want to give you guys an example of a trade you just took now. So let's go into so this is the 1 hour time frame. As you can see, guys, gold moves from zone to zone. So when price got to this high and created a low here, we marked out this low and we marked out this high. So when price came back here, we waited for price to come here, right? Why we didn't take a sell here was that we didn't see any confirmation like a neckline break or something. We didn't see any confirmation. Price just got here and it came back all the way down. So now when price got here, we saw a confirmation which I'm going to be showing you. We saw a confirmation for a buy. So let me go into the lower time frame. So guys, we came all the way to the 3-minute time frame to get a good entry. So we saw a W pattern right here, right? This is a W pattern. So when we saw this W pattern, that was when at the neckline break, that was when we got in, right? For a buy, targeting the next zone, the next high, right? Like I told you guys, I repeat, gold moves from zone to zone. So we were targeting the next high, but unfortunately price didn't get all the way to our TP, right? But most of the times it does, right? So but we were also able to take about 2 partial profits and set break even before price came back to hit us out at break even. So this is just a very simple strategy that you can use as a beginner, an advanced trader, or any kind of level you are at right now. So if you want to trade gold, just have at the back of your mind that gold moves from zones to zone. So let me show you the neckline I'm trying to say. So this was the neckline right here. This was the neckline break of the W pattern right here. This was the neckline break of the W pattern. This white one, right there. So guys, that's it. As you see, guys, I just want to show you. So the W pattern formed and a neckline break, that was when we got in, right? And then price went all the way up, and then we've taken partial profit before price came back all the way down. So you also have to know how to manage your trades for situations like this. So guys, that's it, guys. So guys, that's pretty much it. If you found this video helpful, kindly do well to share this video to others who might also be in need of this type of video. And also don't forget to like and subscribe. And MamFX signing out.